Hello there, everyone. This is Bruce at Fleet Capital Management. It is Friday afternoon, the 14th day of March, 2025. The market's closed. Been another difficult week with all the tariff talk and everything else. So let me just show you on the charts. I don't think this will be a very long video, so bear with me. We always need to say the video presentation is intended for educational purposes only. The discussion of any security is not a recommendation to purchase or sell the security. I'm always available. Bruce at Fleet Capital Management. Let me show you two charts side by side. They are both of the S&P 500. They are both based on a 1 week time frame. Okay. I want you to try to focus on this white line on this chart on the left, how the market went up, and then it came down, and then it went up, and then it really dropped. See that? Let's look at this one. Market went up, came down, market went up, really dropped. Very similar, aren't they? The one on the right is the chart from today. The one on the left is the beginning, this faint line, the beginning of the bear market. Now, there are some similarities. And on the bear market, the blue line, which is the 10-week moving average, crossed the gold line, which is the 20-week moving average, right there. And that to us signifies the beginning of a bear market, potential bear market. This is our bear market avoidance indicator so that we avoid a bear market. You can also see I've circled here where the 10 crossed the 20. Lots of similarities in that. I always say look left to learn. I'm not suggesting we're going into a bear market. I'm suggesting that there are some similarities, and we'll look more closely on the chart, but I found that very interesting. Um, in a downtrending market, if in fact we're in a strong downtrend, we are right now, but if that continues, whenever the market, and this is as of today, whenever the market goes into the extreme fear category, generally we can anticipate some type of a bounce in the market because this is overdone. It's a little less than it was a week ago, but it's still pretty close. But I wouldn't be surprised. We did see a bounce today, and we'll see what happens on Monday. We'll come back to that in just a moment. Okay, let's go over to our matrix. And our matrix is updated through today, of course. And this is the daily signals that we get on the S&P 500. More importantly, much more importantly, are the weekly signals that we get on the S&P 500. And you can see we've been down and we are still down. Down means that the volume on the weekly volume is negative, meaning more sellers than buyers. The MACD is down. That means more momentum to the downside than the upside. The 2 week is below the 10 week. This is even a quicker indicator than our bear market avoidance, excuse me, which is the 10 week, 20 week. When we go down here, I don't buy new stocks because this is a really early indicator. And then if this crosses, which it has now, it crossed on Tuesday. That's why that block is there. Um, that is signaling we're not in a good market. We're in a pretty weak market. Can it turn around? Absolutely, it can. Here's the VIX. I normally only update it once a week, but the whole 2 weeks, pretty much, including that gold one, we've been above the 20 level. Above the 20 level is a caution because there's a lot of fear in the market. And to help understand, when there is fear in the market, there's an old saying that the market takes the escalator up and the elevator down. When there's a lot of fear, markets tend to drop quickly. When there's little fear, markets tend to move up slowly. That would be under 17. So we have some negativity here, but again, it can change. Let's go over to the chart. Um, we had this is the daily chart of the S&P, and when the 20 week, which is the blue on the daily chart, crosses the 50 week, that suggests we are in a correction. So we are in a correction. There's really no question about that. On the weekly chart, remember when the 10 week, which is blue, crosses the 20 week, That's our bear market avoidance indicator, and it's actually our second level. The first level is when the white, which is a 2 week, crosses below the blue, but that can bounce right back up, no problem. But it gives us an early warning sign about a week or two before we see the blue cross the gold. So again, we just want to be out early, and these indicators have served us very well. The market's down dramatically, as you can see, and we have missed most of that. Did we suffer a little bit? Yeah, but not a lot, not a lot. So, what's going to happen going forward? Let's see if I see. Well, before I get to that, let me also explain. When we are in a downtrend, it is extremely common to see up days. Today, here's today. Today was a very good up day. But that may be, there are up days in a down market, just like there are down days in an up market. If I go back here, market open there, closed up there. Remember, the tick to the right is the close. That was a pretty powerful up day. Here on this particular day, this was March 5th, the market opened and then closed at the top. Really strong up day. Opened, closed. Very strong up day. Today was the up day. But that doesn't mean we're out of a downtrend. It just means it's a relief bounce. Some people call it, I hate this term, but some people call it a dead cat bounce in a downtrend. So we are in a downtrend until these indicators change and suggest that we are in an uptrend. Another thing that is not good looking on this daily chart, first of all, this is correction here. And then here's the 200-day moving average, and we're well below the 200-day. That is a very negative piece of information. If we go back up and close above the 200-day, okay, that's pretty good. But then I want to see what happens with the 20 and the 50. So we're just not there yet. And even though we have these strong up days, doesn't mean we're not in a downtrend. On the weekly, we did just cross. This is our bear market avoidance indicator. And we did just cross. And I'm not seeing a lot of positivity on the weekly. The volume is clearly down. The on balance volume is clearly down. The momentum is clearly down. The RSI is clearly down. And let me see what level it's at. It's at the 40 level, which means it could continue to go further. So here's the story. I guess the story is we're in a downtrend, and we are going to respect that we are in a downtrend until the indicators tell us that we're not. And if we see a really good day like we did today, I mean, the NASDAQ was up 2.4%, S&P was up 2.13%. That's great. Those are huge numbers. But we're still in a downtrend. And as I've tried to show you, these are normal bounces. We'll see what happens next week. Next week is a Fed meeting. Next week is also what we call options expiration. The third Thursday of every month is options expiration. Those two things, Tuesday, Wednesday is the Fed meeting, Thursday is options expiration. We can pretty much plan on significantly elevated volatility. Now, volatility can go both ways. It can go up and it can go down. That's why we're looking at the trend. But I think next week is not going to be the week that really tells us if we've hit a bottom, because I think we're going to see a lot of volatility next week. After that, I think we'll get a better clue, a better vision using our technical analysis if the trend might be changing. Might it be changing from down to up? We just don't know yet. We have on balance volume that is down. It dried up a little bit today. We've got a lot of negative momentum. We were a little bit oversold. You see how this line went below the green line? This is the RSI. That means it's oversold, and we can expect a bounce, and that's what we got. So, the overriding signal is we're in a downtrend. We have a couple of little things that look positive, but not a whole lot. Our investment selection right now is excellent. I believe we have our biggest position is in gold, and gold has continued to make us money. I went into gold back here, and then I added, this is a little bit cluttered, but I added 3% to our position to bring us to 6%. And then it went up and I added another 4%. So most accounts, not all, but most accounts have about a 10% position in gold, and then gold is up here. So we're doing fine with gold. XLP has had a little bit of a hard time, but and we are at alert stop, but I haven't gotten rid of it because it's sitting right at that 200-day moving average. If it breaks below, we're going to get rid of it with a small loss, not a big loss, but I'm hoping that that will turn around. XLV has not gone down to our alert yet. It's right down around this area of support. I'm watching that closely, but it does look like it is starting to turn back up. I like that. Our newest investment is BALT. This is a 90-day investment. It's a 3-month investment, and we don't care when it happens, but we want this thing to be positive by the end of that 3 months. And that is possible. And this is a new investment we're using. I showed this on last week's video and some analysis of how this works. If you have any questions about that, please go back to last week's video if you haven't seen that, or rewatch it. So we are in pretty good company right here with our investments. We have no stock investments right now. I'm watching Bitcoin very closely. I'm not worried about many of you have the 100% downside protected Bitcoin. Well, you can't lose money in that. Some of you have a 10% buffered Bitcoin, which means you cannot go down more than 10%. And that's a 1 year period. And one or two of you has a 20% buffer. So I'm not really worried about any of those. What I'm looking to catch is Bitcoin turning back up? And we will use IBIT for most accounts. We'll use IBIT to get some short-term, sometimes very significant bounces. I mean, bounces with IBIT can be 20%, 30%. We've done 40%. But we're going to be cautious, and I'm not going into it right now. But I just wanted you to know I'm watching that very closely. And that's really the whole story. So if you have any questions, I know it's been kind of brutal, but if you have any questions, let me know. Everything negative that has happened in the market is because of Mr. Trump's temper tantrums over tariffs, which he does not know how to manage. The entire world economy knows that he does not know how to manage these tariffs. I'm not completely convinced he knows what a tariff is. So hopefully some of this stuff will go away. And the reason we've had such a choppy market is he puts tariffs on, the next day he takes tariffs off. Then he puts tariffs on, and then he takes tariffs off. And then he puts tariffs on. That's not how you manage an economy. It's not how you manage a business. It's not how you manage the world. So there's a lot of noise, and that noise is why we have such a high VIX over 20. We're almost at 22 right now. And hopefully that will calm down, but we'll take it day by day. We will manage day by day. The last thing I'll say is the vast majority of most clients' money is in a treasury money market fund that's getting about 4.7, excuse me, 4.07, 4.08% somewhere in there. So we're actually making money. It only pays the dividend once a month, so you don't see it until the end of the month. Yeah, so we're making money. You'll see that as the month ends, and we'll go from there. Anyway, round and round. If you have any questions, let me know. Shoot me an email, hop on my Zoom calendar, and we can talk about it. But I think we're positioned very, very well. Don't get FOMO, fear of missing out, if we have a big up day like we did today, because I'm trying to show you an up day is meaningless. We're in downtrend until that changes. Okay, enjoy your weekend. Please reach out to me if you have any questions. Talk to you soon. Bye-bye.